I think that's right. It's been somewhat ironic that the one large economy that hasn't engaged in China-style stimulus is China. And I wonder if there is a slight change of tone from China authorities in the last several weeks. We had the PBOC release their Q1 report on Sunday, and there was a mention of them adopting more powerful policies, albeit it should be noted, of course, interest rates in China are still very high by global standards. Now, as we head towards the National People's Congress kicking off next Friday, May the 22nd, having been delayed since March, I think we might see a few things, potentially a de-emphasis of GDP targets, which I think is a good thing. I think an over-focus on a numerical quantitative target comes with some problems. So for me, moving away from that, a focus on quality would actually be good news. Secondly, I think we might see some news flow around so-called hukou reform, which would be important, potentially bringing millions of people more into the formal economy. And thirdly, and perhaps most importantly, fiscal stimulus itself. So I think there is a real discussion going on within China and within the China authorities, but I do think the employment concerns are now sufficient that China will join the global fiscal efforts to try to build a bridge from before the virus to after the virus. So I would expect a fiscal thrust announced in and around the NPC towards the end of next week of maybe 3 to 4%, which is approaching 700 or 800 billion dollars. Obviously, I think a very relevant number. So that's an important event for markets both in China and globally, frankly, given the importance of the scale of China, of course.